Hey everyone, it's Alan Brochstein from New Cannabis Ventures and 420 Investor, and I'm here with your weekly update. It was another tough week for the market with the sell-off on Wednesday, seeing a small rally on Thursday, and then new lows on Friday. In fact, it ended up leaving the index down 7.5% in 2021 so far, and we're heading into earnings season limping, I would say. That's for sure. So this was a very exciting week. Unfortunately, none of it was really too positive. The news that we published at New Cannabis Ventures, as I've said in the past, our press releases tend to be around earnings reports, M&A, and financing transactions. And just looking at what we ran this week, well, there was one financing transaction that I thought was pretty stellar, and that was AFC Gamma, the mortgage REIT, raising $100 million at 5.75% for 5.5 years. And this is important because this is growth capital for the cannabis industry. I think one of the more bullish developments over the past several months has been an increasing amount of capital available to cannabis operators in the United States through either sale-leaseback or directly through debt. We saw the Verano debt, we saw the Trulieve debt recently. These are very positive developments. Why? Because they reduce the likelihood of equity capital raises. On the earnings front, Hexo was a big disaster. And this is something I talked about on Twitter, actually. I don't generally use these videos to really share much about the stocks themselves, but for those that have been following Hexo, it's been trading for a little bit over 3 years now. In Canada, it posted an all-time low on Friday, and in the United States, it came really close. And this is a company that had a CEO who was probably one of the most arrogant people of all the leaders among the Canadian LPs. And he became very desperate earlier this year, in my view anyway, engaging on extensive M&A, buying Zenabis, 48 North, and then the huge Redecan, and probably paid top price for Redecan, and put the company in harm's way. So as I reported, I think last week, he was booted. But this quarter, if you just looked at the revenue, you're like, oh, it looks good. They grew compared to a year ago. It was a record quarter, in fact. But you have to take into account two factors. Number one, there was a very large shipment to Israel that's probably not recurring of, I believe, 6 million. And then I believe 7 million is what the Zenabis transaction added. So that growth is pretty much a mirage. What's really grown is the debt. Now, to be fair, they will be reporting a lot higher revenue in the months ahead because they'll be including Redecan. But this past quarter, which was their Q4, saw the adjusted EBITDA deteriorate from Q3. But that's not the problem. The problem is the company took on a lot of debt to make a cash payment to Redecan. So if you check out my Twitter feed, you'll see some commentary. I listened to that call and was horrified, and I'll just leave it at that. It's unfortunate. The other piece of earnings news was a pre-announcement from Hydrofarm. Hydrofarm has been very aggressive on the acquisition front this year. They announced yet another acquisition as well in that press release. And their pre-announcement was a sequential decline from Q2 to Q3. This is similar to what GrowGen had pre-announced earlier in October. And they also pointed out that all of the growth from a year ago is coming from M&A. Pretty scary. So those were the three press releases that I included in our New Cannabis Ventures weekly newsletter, which will be published tomorrow. We've been publishing it for 6+ years now. We also included links to, it looks like 6 other posts. Since I started doing these videos after Labor Day, I believe this is the first time we've included a guest post, but that's another type of exclusive content that we run. And there is a contribution from a West Coast lawyer who was previously serving the alcohol industry, I think others as well. And she's been covering the cannabis industry for several years now. And she talked about what some of the East Coast operators can learn from West Coast operators. Then the other exclusive news that we ran, well, as I always mention, one of the things that we talk about are the interviews, and we did 2 interviews this week. One was with Dutchie. It was our 4th interview in 3 years. And Dutchie, if you're not familiar with it, is a technology company, and what's remarkable to me is it's actually the most valuable cannabis technology company among, certainly among all public companies, but I assume among all private companies as well, valued more highly than Weedmaps, for example. And we don't know the revenue run rate, but the company they just raised capital and it was valued at $3.75 billion. I was a little bit disappointed in the interview. CEO there, Ross Lipson, very nice guy. And I was hoping he would give a little bit more color on why investors are willing to value his company at such a high amount. And I was left kind of thinking that he's playing his cards close to the vest. But it was a good interview. I think definitely worth a read and perhaps even a listen. We do include the audio with those interviews. The other interview that we did was with Sundial's CEO, Zachary George. And, Sundial has really transformed itself. And in the interview, we tried to get a better understanding of where they're going to create value going forward. And, it was originally a Canadian LP. They had to change their business model to become more of a investor now, both on the equity and debt side. They've made equity investments in Canada in Indiva and in Valens, minority positions. They've also acquired a retailer, Inner Spirit, which has its own stores but is predominantly a franchisor. And then they have the pending acquisition of Alcanna. So he talked about all that. And they've also been lending money in the United States through a joint venture in a compliant manner to 2 companies so far, Jushi and Green Rose. Green Rose is about to close their SPAC deal. So that was those were our 2 interviews from this week. The other exclusive news that we run tends to revolve around the indexes that we maintain. We maintain 7 indices. Each month, I write 4 different articles. We published 2 of them this week right after the bell. Friday month ends are tough for me, but we got those in right under the bell. So the first one was about the American Cannabis Operators Index, and it declined a lot in October, over 11%. So I talked about the winners and losers among that group. Interestingly, if you read the article, you'll see the winners all had one thing in common. I'll just let you go figure that one out on your own. I also published the piece on the Canadian indices. So that's not only our Canadian Cannabis LP Index, but it's also the 3 sub-indices, Tier 1, Tier 2, and Tier 3. And we broke it down there. And this month, Tier 3 did better than the other 2 tiers. But you can see that that index is now down more than double digit in 2021. We also published finally, each month I publish, and during earnings season twice, I publish about the revenue tracker that we maintain, which tracks not only revenue but also operating profit. And there was not a lot of news in October. I just told you about Hexo. There were a few other reports, Tilray and Valens. So all 3 of these painted a kind of negative picture in the near term of Canada, right? And then also Turning Point Brands reported this week, and so those are the four companies I have that reported in October, a light month, but a tsunami of reports will be hitting beginning this week, and I shared analyst projections for a lot of these companies so that our readers kind of know what to expect. And then finally, let me just wrap up with each week in our newsletter, in addition to providing links to the key news stories that we published, we also share kind of a high-level thought piece. And this week, I discussed the breakdown in GTI. GTI fell about 26% in October. You may have caught my YouTube from this week. If not, you can go find that. And in that YouTube, I did discuss more of the technical aspect. But last week, ahead of earnings season, where I don't know that we'll get that many 2022 outlooks quite yet, that's more likely to hit. It could start to hit, like Cureleaf, which reports on, I believe, November 9th, may do that. Trulieve, I think, said that they would do theirs when they report their year end. That's in March. So I don't know that we'll get that many 2022 outlooks, but this is a time when investors start to look at the year ahead. As we conclude 2021, they want to know what to expect in 2022. And, one of the things I mentioned in this piece, people are a little bit worried about Q3 earnings reports, right? We've seen the news about slowdowns in cannabis sales across the country from the very torrid levels a year ago. We've also seen delays in states like New Jersey to go legal, and in the opening of dispensaries in Illinois, for example. This is the way the cannabis industry works. But last week at 420 Investor, I took a look at the top 9 MSOs by revenue and looked at analyst consensus for 2022 for each of those companies. I looked at the growth rates that were projected, and I looked at the valuations, both enterprise value to EBITDA and enterprise value to sales. And so GTI stood out for being a lot more expensive than its peers, and I quantify that in this article, by the way. I shared all the detail with my subscribers at 420 Investor, and some were really cheap. And so in this piece this week, I point out that large decline in GTI was really, from a technical standpoint, kind of catching up to what its peers have done. In fact, year to date, GTI is still the best performer at down 16%, but the worst is down 21%. So all of the 4 largest MSOs have performed similarly in 2021 thus far. But I also talk about that premium valuation. So I thought it was a pretty interesting read. I hope you enjoy it. And I wish everybody good luck in earnings season. Take care.